Imagine this. What if the Social Security Administration could look directly into your bank account at any moment? Every deposit, every transfer, every purchase, reviewed to see if it affects your benefits. Would that make you feel safe, or would it make you anxious about your financial future? This isn't science fiction. It's the direction things are heading. A recent rule, known internally as EM25046, is changing how the SSA monitors certain benefits. Essentially, it gives the agency more direct access to bank accounts for people receiving Supplemental Security Income, SSI. And while it's easy to think this only affects seniors over 65, the reality is broader and more important for anyone depending on federal benefits. Let's break it down. SSI is different from retirement or disability benefits. It's strictly for individuals with very low income and limited assets. To qualify, you can't have more than $2,000 in countable resources. For years, the SSA has reviewed bank accounts of SSI recipients, but EM25046 takes this to the next level. It instructs managers to make account checks faster, broader, and more direct. In short, the SSA wants easier access to your financial activity. The scope isn't limited to seniors. The rule hints at future expansions to include other groups, such as disabled recipients, immigrants on SSI, and potentially even SSDI or retirees down the line. What starts as a targeted rule often grows into standard practice over time, meaning millions could eventually fall under closer scrutiny. Why is the SSA doing this? From their perspective, it's about preventing fraud and stopping overpayments. Every year, billions of dollars are lost due to unreported income, mistakes, or outright fraud. Faster access to bank data allows the agency to detect issues quickly. For example, if someone's resources exceed the $2,000 SSI limit, or if a person is working without reporting wages, the system flags it. Real-life cases show the consequences. In Pennsylvania, a man receiving benefits worked multiple jobs but didn't report his income. Bank deposits and payroll data revealed the truth, resulting in fraud charges, repayment of overpayments, and possible jail time. These aren't isolated incidents. The SSA is increasingly publicizing cases to send a clear message. Hiding income is risky. The reason this happens faster today? Artificial intelligence. In the past, humans manually reviewed statements, a slow process. Now, AI-powered systems can scan thousands of accounts within minutes. These tools track patterns, steady payroll deposits, regular transfers, sudden spikes. They're not checking your grocery receipts. They're looking for trends that indicate unreported income or support. Once flagged, a human investigator reviews the details. Here's what the SSA watches most closely. Employer payroll deposits. These are easy to spot. Wages from jobs, including large payroll processors like ADP, are monitored. For SSDI, working over the substantial gainful activity threshold, currently just over $1,400 per month, can affect eligibility. Retirees under full retirement age may see reduced benefits if they earn too much. Gig economy income, payments from Uber, DoorDash, Amazon Flex, or Upwork are tracked too. These platforms report income to the IRS, and deposits appear in accounts. SSI treats gig earnings like regular wages. SSDI treats steady gig work as self-employment. Peer-to-peer transfers. Small one-time transfers like $20 for pizza aren't an issue, but regular transfers, such as $300 monthly from a family member, can count as in-kind support and reduce SSI benefits. Patterns matter. Large lump sums, inheritances, insurance payouts, and legal settlements can easily push your account over the $2,000 resource limit. There are exceptions, but it's important to document and track everything. Sales of property, selling a car, house, land, or cryptocurrency can create reportable deposits. Even collectibles may count. Keep clear records of all transactions. Gambling or lottery winnings, even small winnings, can affect SSI if they increase your account balance beyond limits. Large winnings are automatically reported to the IRS, tax refunds and stimulus payments. Certain refunds may temporarily raise your account balance and, after a year, could count against SSI resource limits. Track these carefully. Rental income and short-term rentals. Earnings from Airbnb or renting a room are considered ongoing income. For SSI, this can reduce benefits. For SSDI, steady income may affect eligibility. Self-employment and small business deposits, client payments, merchant deposits, and inventory purchases are cross-checked with IRS filings. Make sure your reported income matches reality. International transfers. Frequent transfers abroad may prompt questions about residency. SSI has strict U.S. residency rules, and extended absences could stop benefits. SSDI and retirement benefits can also be affected. Installment payments from private sales. For example, selling an RV for $500 a month over 2 years creates a pattern. Without documentation, the SSA might interpret it as wages or support. Household reimbursements. If someone pays your rent or utilities regularly, it counts as in-kind support and can reduce SSI benefits. Representative payees who misuse funds can also be flagged. While EM25046 initially targets SSI, the monitoring tools are expanding. Payroll matching and account checks are already happening for SSDI and retirement benefits. Over the next decade, direct account monitoring could become standard practice for millions of Americans. The SSA is shifting from a traditional administrative approach to a more corporate-style watchdog system. Their logic: every prevented overpayment saves money for the trust fund. For recipients, this means more requests for verification, more notices, and faster detection of issues. But it also means that if you report honestly, maintain records, and track your finances, decisions can be made more quickly and accurately. Transparency is now the safest approach. Here's what you can do to protect yourself. Report income and financial changes promptly. Keep all receipts, contracts, and documentation. Understand the $2,000 resource limit and rules on in-kind support for SSI. Learn the substantial gainful activity rules for SSDI. Be aware of the earnings test if you are under full retirement age for Social Security. Track gig income, rental income, and any unusual deposits carefully. In simple terms, EM25046 signals a major change. AI crawlers are now scanning accounts for patterns that may indicate unreported income, support, or resources. Transactions under watch include payroll, gig income, peer-to-peer transfers, lump sums, sales, gambling, tax refunds, rental income, self-employment, international transfers, installment payments, and household support. The trend is clear. Transparency is expected, and the system is becoming more automated and precise. Now it's your turn. Do you think this kind of monitoring keeps the system fair, or does it cross the line into government overreach? Share your thoughts, because your perspective matters. Staying informed is the best protection. By understanding the rules, keeping records, and reporting changes, you can safeguard your benefits and manage your finances with confidence. This isn't about fear, it's about preparation. Together, we can navigate these changes with clarity and security.